Hey everyone, and welcome to India Explained. This is the Ada where we try to make all that complicated money stuff, well, simple. Today, we're diving into a little three-digit number that causes a whole lot of stress. But hey, before we start, if you like what we do, please hit that like, share, and subscribe button. It honestly helps us a ton.
Yeah, I'm so glad we're talking about this. Seriously. I'm hoping to get a home loan in maybe a year or two, and literally everyone, my dad, my uncle, even the bank guy, keeps going on about my CIBIL score. It just sounds so heavy and complicated. What is this thing?
Don't worry, man, it's not as scary as it sounds. Not at all. The absolute easiest way to think about it is like this. Your CIBIL score is just your financial report card. That's it. It's a grade that shows how you've handled borrowing money in the past. Simple as that. So, this grade is a three-digit number that goes from 300 all the way up to 900. And CIBIL, which is just the name of the company that calculates it, gives this score to banks so they can get a quick idea of how responsible you are. And yeah, just like in school, the higher that number, the better you look.
You can almost think of this dial as a trust meter. When a bank is deciding whether to give you that big home loan, this is one of the very first things they'll check. And the closer that needle is to 900, the more they trust that you're going to pay them back on time.
And those numbers aren't random. They translate into real grades for the lenders. If you're anywhere above 750, they basically see you as an excellent student. You're a top-tier, reliable borrower. Between 700 and 749, you're still good, and you'll likely get your loan. But you see, once you drop below 650, things get a bit difficult. That's when banks start to get nervous. Right, I get it. Good report card gets you into a good college. Makes sense. But why is this one number so incredibly powerful? I mean, what's the real-world difference between a score of, say, 680 and 780? How does that actually affect my dream of buying a house? Now that is the most important question. Because a great score doesn't just get you a yes on your loan, it actually saves you a ton of money. With a score over 750, approvals are faster, sure. But the big one is you get lower interest rates. I mean, on a 50 lakh home loan over 20 years, even a tiny 0.5% lower interest rate can save you almost 2 lakh rupees in total. Plus, you get offered higher loan amounts, better credit cards, you're suddenly in control. Whoa, okay, hold on. Saving lakhs? That got my attention. That is a huge deal. So if this is a report card, what are the subjects? What exactly are they grading me on to come up with this magic number? Great question, and it's not all graded equally. You see this chart? The biggest piece of the pie, a massive 35%, is your repayment history. That's like your final exam. Right after that, at 30%, is something called credit utilization. The other things, like how long you've been borrowing and the types of loans you have, make up the rest. So let's talk about the big one first, repayment history. This is as simple as it gets. Did you pay your credit card bills and your EMIs on time? Every single missed or late payment is like a big red mark on that report card. If you want a good score, this part is absolutely non-negotiable. Paying on time every time is the golden rule. Okay, the next biggest factor is credit utilization, and this is the one that catches a lot of people out. It's just the percentage of your total credit card limit that you're using. So if you have a 1 lakh limit and you've spent 50,000, your utilization is 50%. High numbers like that make lenders think you might be stretched for cash. So the pro tip here is to always try to keep your usage below 30%. And just quickly on the others, having a long credit history just shows you have more experience managing debt. And having a healthy mix, maybe a car loan and a credit card, shows you can handle different kinds of financial responsibility. All right, so now that we've got the basics down, let's do something fun. Let's bust some of the most common CIBIL myths out there. Because man, there is a lot of bad information floating around. Oh, this is the one that gets me. I've been legit scared to check my own score because someone told me that just checking it makes it go down. Yeah, I hear that all the time, and it is a complete myth. When you check your own score, it's called a soft inquiry. It has zero, and I mean zero, impact on your score. It's actually smart to check it. The only thing that has a small impact is a hard inquiry, which is when a bank checks your score because you applied for a loan. Here's another one people get wrong. They think a huge salary means a perfect CIBIL score. Absolutely not true. Your income doesn't even factor into the calculation. You could be earning crores, but if you're missing your payments, your score is going to be terrible. It's all about how you manage your money, not how much you make. Now, this next one feels like it should be the right thing to do, But it's not. People often do a spring cleaning of their wallets and close down old credit cards they don't use. Bad idea. That old card is proof of your long credit history, and that's a good thing. Closing it can actually make your score drop. And this one, oh man, this might be the most damaging myth of all. The idea that you should keep a small balance on your credit card and pay interest to show that you're a good customer. No, please don't do this. All you're doing is giving the bank free money. The best thing you can do for your score is to pay your entire bill in full on time. That was eye-opening. I think I believed at least 2 of those myths. Okay, I feel like I actually get this now. So give it to me straight. What's the action plan? What are the simple, concrete things I can start doing today to get my score up into that excellent zone? You got it. Here is the entire game plan in 5 simple steps. Number 1, pay on time every single time. Set reminders, do whatever it takes. 2, don't max out your cards. Keep that usage under 30%. 3, don't apply for a bunch of new loans all at once. 4, check your own report once a year to look for mistakes. And 5, over the long run, try to build a healthy mix of different kinds of credit. That's it. You know what? That's a huge weight off my shoulders. I came into this thinking CIBIL was some big, scary, mysterious thing. But it's not. It's just a system with rules. And now I actually know the rules. I feel like I'm in control now. And that is the perfect way to look at it. Your CIBIL score isn't some final grade that's stamped on you for life. It's alive. It changes. Think of it as the opening chapter of your financial story, and you're the one holding the pen. You get to decide what happens next. So I really hope this chat helped clear things up for you. And for everyone watching, if you want more simple explainers like this, make sure you subscribe to India Explained. Thanks for hanging out with us.